Hello again. We are the Knowles Insurance Agency, husband and wife team, Richard and Samantha Knowles. We've had the great privilege of serving Medicare beneficiaries for over 16 years. We're heading on 2 decades of service. Today I'm going to talk a little bit. I have a couple of pointers on my screen here, and I'm trying to do this without my glasses, so we'll see how that works. But I want to talk about higher income earners and IRMAA and how it all goes together with your Medicare. Basically, if you're a higher income earner, you're going to pay an additional premium for your Medicare Part B and your D. D is the drug plan, prescription drug portion of Medicare. IRMAA is income related monthly adjustment amount, and here's basically how it works. Your Part B helps pay for the doctor services, outpatient care, chemotherapy, radiation, surgeries, operations, anything that would fall under a doctor's care. For most people, the government is going to pay about 75% of your Part B premium. That leaves 25% to the Medicare beneficiary. That usually equates to $135.50. If you're a higher income earner, then you're going to pay a larger percentage of the overall cost of your Part B. It's based on what you report to the IRS. The IRS provides your last filed tax return to Social Security. So it's based on your last filed tax return, but basically your Part B, you may pay 30, 40, 50, up to 85% of the overall cost of your Part B. The Medicare drug plan, also called Part D as in dog, or an RX plan, same thing. Most beneficiaries, the government is going to pay a majority of the cost. The Medicare beneficiary is going to pay the balance. For a higher income earner, what you're going to do is you're going to pay the premium for whatever plan works best for your medications, whatever you decide with your insurance agent. Then you're going to pay an additional premium on top of that. I'm going to show you a chart here in just a second, but luckily Social Security does use what we call a sliding scale. And what that means is they take into consideration not just your income, but your filing status. So, for example, a single tax filer that is a higher income earner is going to be a little different IRMAA than a married filing jointly. So I'm going to show you the chart. So I'm looking at the CMS, the higher income earner IRMAA chart. It's a standard publication. And I'm looking at the chart here, and this is clearly for 2019. Now we're using just one set of example. There are other situations, but we're using the first column, and you can see where we've asterisked down at the bottom there, and that clearly defines your filing status and then the amount. So the second column, Part B, is the additional IRMAA, the additional premium that particular set of individuals would have to pay. And then the third column is the drug additional IRMAA. So again, let's scroll down. If we're looking at, obviously we're looking at an individual with an MAG of 107 to 133.5 and married filing jointly from 214 to 267. So those individuals would have to pay the standard Part B premium of $135.50 plus an additional IRMAA of $135.40. Those same individuals would go find themselves a drug plan, whichever serves them best. They would pay that plan's premium plus an additional IRMAA of $31.90. So a couple of obvious points, probably. I like to point out, let's say you are Medicare eligible the first 6 months of a year. Well, the majority of us file our taxes by April 15th. Some people file an extension. So if you're in the first 5 months of a year, it's probably very likely that they'll have to go back 2 years to get your income. If you're aging in and rolling into your A and B in the latter half of the year, certainly the last quarter, it's very likely that you've already filed your tax return unless you file an extension. But if you filed the previous year and you're in the latter half of a year, it's very likely that they'll use last year's tax return. So remember, it's always up to the IRS. The IRS provides the information to Social Security, and that's what they go by. So here's the great question. What happens when my income goes down? Because that's going to happen. So obviously, while you're working, you're generating a high income and you pay more. But you're in retirement now. Hopefully, you're traveling the world and you're living on your pension and your Social Security and your IRA. So your income has gone down. It's a very simple solution that can be done any time during the year. It's an SSA 44. It's on our website. We're knowlesinsuranceagency.net, Medicare resources, or call us, or you can just Google SSA 44. It's an IRMAA life change, income related reduction form. It has a million names. We always suggest that you fill the form out and you go into an office. I would not mail it in. I would not deal with that snail mail. I would take it in and sit down across from someone. We always talk about providing documentation too. I feel like it's always a good idea to support any changes. Maybe your retirement letter, maybe a death certificate, anything that would support the income changes is a good idea.